The Federal Reserve, led by new chairman Kevin Warsh, has kept interest rates steady but signaled a major shift in monetary policy. While the decision to hold rates was expected, Warsh delivered a surprisingly firm message that caught markets off guard. Experts suggest this marks a new era for the central bank, with a strict focus on price stability. Major stock averages dropped following the announcement, as investors realized that predicting the Federal Reserve's next moves just became much harder. Warsh also indicated that the central bank's operating framework will likely undergo significant changes, leaving financial markets guessing about what comes next. Global markets are on high alert for potential currency intervention in Japan. This comes after the United States Federal Reserve took a firm stance on interest rates, causing the Japanese yen to drop to levels that have historically triggered government action. The higher yields in the United States are putting broad pressure on currencies across Asia. This makes it increasingly difficult for central banks in the region to lower their own interest rates without risking further damage to their currencies. Meanwhile, technology stocks across Asia are expected to fall, following similar drops in the United States, as global investors adjust to the possibility of earlier-than-expected rate hikes. The Federal Reserve voted unanimously to keep its benchmark interest rate unchanged at a range of 3.5 to 3.75%. However, policymakers completely removed previous language that hinted at future rate cuts. Instead, they signaled that a rate increase is very much on the table before the end of the year. The central bank raised its inflation outlook for the year 2026 to 3.6%, noting that inflation remains stubbornly above its 2% target. Chairman Kevin Warsh emphasized that the committee is strongly committed to lowering inflation, warning that recent price increases can no longer be ignored.